Okay, so I wanted to cover the Bitcoin chart. I was going to do this later today to do some stock stuff as well, but we had some big movement yesterday and then overnight that I wanted to look at. But before that, I wanted to talk about how I was talking about patterns and how what the accuracy would be as far as when can you declare that a target is reached. And what crossed my mind was that because I was looking at what's the error on a target. How much up or down would you consider it reached? Really above, because this never got exactly to where I drew the target of 17,435. So, like I was saying, it crossed my mind that there's actually error in the way just in me moving the mouse and then me drawing something. So if I go to draw this again, just as an example, I haven't done this offline or anything, but just as an example, uh, if I go to go draw this here and then again here, right? That right there causes error, right? The first time I drew it, it was 8.43%. Now it's 7.9. And then I put it, and then when I place it here, I'm just eyeballing it. So now I have something else, right? So now I have something totally different. I can do it again and show you the same thing. There's error in the way I draw these lines, and then there's error in the way I actually mark where the target is. Because right, 7.99. That's another example. Even if I put it kind of on top of where it was before, right? So I did this 3 separate times. Got 3 separate targets. So let's go down to the small time frame and actually see where those are at relative to where I drew them, and then what those targets were. So the first one was, I guess it's 8 point. No, yeah, see, I don't even. The first one was this one, 8.43%, which gave me 17,435. So let's get rid of that. We actually did test that, but no, we actually didn't. We were a little bit above it. But I'll just hide it instead of deleting it. All right, and then the one I just drew here, that got me all the way down 17,462, or above that. So that was that's error. This one, 17,468. Even it was within what $6, but that just shows that there's error there whenever I draw that. So I guess this will be because I actually reached out to a couple of traders to kind of get an answer of what they thought, but I never got a response, which is fine. That might be something, they might have already discovered what I discovered, or what I think the case is that there's error there. So maybe within 1%, if you're within 1% of a target, you're probably okay. Because what I said on the 4 hour, the last video, was that once we got a close below this 9 here, it was on the chart and I got rid of it. I can put it back on there. Once we got a close below this on the 4 hour, we were going to go lower. And we did. We went a little bit lower. We didn't go a lot lower, but we went a little bit lower. We did go lower. That is bearish if you close below this. It would have been extremely bearish if you would have closed below this. So 17,686. Where do we close here? Yeah, we did. We closed below that too here, but it was already on the exhaustion area, and we got a 9, and then we got a rebound. So we did close below this little bit of resistance. It was supporting price, and then it went lower, and then we bounced. So this drop is most likely over. We could get some different price action here, but this is looking extremely bullish, and bullish back past 20,000 is what I'm looking at. Even though there's some indicators saying that this just could be a rebound from here, and we could be ranging again in this channel that I drew a while back. So I'm going to say that we've hit the target. We came within, Let's see how many percentage points. Oh man, we came within 1%. So going forward in the future, I'm going to say if you're a percent or less than a percent of a target that you drew, you're probably there. Given that there's error in the way you draw these lines, there's error in the way you draw your target. So I'm going to say 1% or less, you're probably good. That's what I'm going to go by in the future. So we've completed this. This is taken care of. I think we're done with this triangle. I'll hide it, maybe just for historical purposes. All right, so let's talk to the move. So we got the 9, and then we're rebounding off. We rebounded off of this. Let's look at the daily. The daily is still within our range. This line right here was a TD9 that we never went below and then back tested up above. Initially here we didn't do that, but we did that here. We broke below it. We tested this bottom one. We got there. We kind of rebounded off of a target that was a triangle, right? So we can get rid of... Well, I drew this one for the 9 that printed just so that I have it, because those are important areas. So I'll get rid of this one because we tested that with a red number. And then now we had this one up here, which was a red 9, and we back tested it with a green number. So I'll get rid of that. So everything here is just ranging within a channel. This right here, whenever we closed above this 1, that's bullish. I can draw another line here just to keep track of it, of a 9 being printed on the 4-hour. So maybe we consolidate here for a little while. We come back down to this 19,290. We could consolidate for the rest of the day and then print a red number, and then maybe tomorrow we go higher past this channel. We get a daily close. I mean, I drew this on the 4-hour, but it looks actually really good on the 4-hour. I drew it on the dailies when I drew it. But if we get a close above this channel, we're probably going to go higher, right? So this is what you kind of want it to look like. So you would want it to close above it, right? So we go higher. And then you would want a back test of the breakout, something like this. And then that would be an area for a bounce, right? And then we go higher. We go higher. That's what you want to see. Something like that. We'll see how that goes. I mean, that would be amazing. That Mayer multiple band would be we would break it. And let me go to it right here. Actually, I'm going to bookmark this because I keep on using it, and I'm probably going to refer back to it. Done. All right, so yeah, we would be breaking above this, and we'd probably get would we get a daily close at 20.5? We could, and if we did, especially on the second try, historically, the next area of resistance would be around 30,000, and we would probably move to that rather quickly. You can look at these. They moved, what was it? Let me get the dates better on this. Oh, that's May. So May, early May, and then we pretty much got there a month later. Here, August, it took only 2 weeks. And within the month, so within 30 days we got there. So if we break this, kind of like the all-time high, whenever it breaks this band, it takes only about 30 days. I mean, it is bullish extension. I guess there's a lot of exuberance and people are FOMO buying there since price breaks out. But we'll see. We'll look at this one. We can look at this one back in 2019. So let's start here because that's when it really broke. Again, May, and then we got all the way to the top in June. A little bit more than a month, but we got there. So, but this one also moseyed around this. We could do the same thing here, but it breaks this and closes on the daily. We're in for some price movement. I don't want to click on that. All right, so what do I think? What do I think is going to happen? I think, again, if you're looking to take a position, you wait. I mean, look at this candle. That is still, even though we got big price movement, that is still, that's a doji candle. It's a reversal candle, especially on the 9. I mean, this big wick here showing that there was more buyers and sellers and they kind of took control, but there could be some exhaustion here still. Again, you're gonna wait if you want to be conservative as possible until you get probably a weekly close or at least a daily close above this where this channel is drawn to go all in. So, but let's look at our indicators real quick. 4 hours nice, so let's look at the 4 hour. Bollinger Bands. Let me get rid of some of this other stuff. We're on the upper limit. You want this to follow through some. Yeah, see, so we're on this upper limit. We're kind of outside of it already. We could get a pullback, little one. Maybe back down to like 19. Here, we're kind of in the middle, so we could, go pretty far. But I think, we were on a 9 on the 4 hour, so I think we'll get, like I said, we can go sideways for a little while, which would be okay. Give time for this Bollinger Band to catch up, and then we can go higher. What else do we have? CMF. So the CMF kind of was showing strength here, but it's going up. It's trending up with the trend, so that's okay. This one looks fine. You want it to break above this candle here. You want it, to kind of get a confirmation of a sustained rally. You want it to break above that level, which would be 0.29. We're at 0.19. It needs to gain basically 10 basis points. Hash ribbons, that gave us a buy. Before, like I said, that's a good area. It would get you out at 20% drawdown, but that's only happened once. This has been, a good indicator to buy and hold and then exit whenever other indicators are telling you towards a top area that it's time to get out. This is the stop and reversal points. They never broke. I did say on the weekly that I thought we would break it eventually. We didn't get that close to it. I still think that's going to happen. Next time it's 16, 8. But we could go here. We could break this channel. We could go all the way to 30,000. These stop and reversal points could be like at 22, 24, and then we break it. That's a back test of a drop, and then we go higher. So they don't necessarily have to be broken. They weren't a couple of times in 2017 whenever price came back, but we'll see. We'll see. I'm still watching those. On balance volume, still high on the weekly. On the daily, it's going sideways, which is still good. And then it kind of sold off here on the 4 hour. But again, you would want it to increase as much as it was the previous high. But we're just consolidating in this channel, which is extremely good. The longer we do it, the better it is. We build up support areas of buyers here. This resistance is probably very thin. And once we break this, there's going to be big price movements. We can look at our 1 hour strategy on the 30 MA, and I think it was good. Let me make them all 30 so we don't have to look at this other spaghetti. Okay, so let's look at what it would have done. Here would have got you in because you would have waited. That would have been a losing trade here. And then let's look at it. Let's actually pull up the strategy. Here we go. Let me adjust this. Here, simple move, simple MA. We can look at the list of trades. Here. and you can kind of see what the loss would have been. So I have the commission at 0 because if you're trained, I mean, this doesn't actually turn out to be great. I don't know what the fees are for Coinbase off the top of my head, but say it's a half or something, half a percentage. I think it makes it a losing strategy. Yeah, so you would have lost. So you have to be cautious here because I need to develop another set of code to kind of implement maybe some other indicators to make this profitable. As far as if you're trading with a fee, but I think eventually those fees will go away, just like they did with TD Ameritrade, E-Trade. Eventually, those fees will go down. Maybe you're going to have to still pay the Bitcoin blockchain fee, but as far as commission fees, I think those will go away eventually. But right now, I mean, the only place that I know of that two places that you can trade and buy Bitcoin with zero commission or zero fees are Robinhood and Level. So let's see. Let's change this back to 0% because the majority of people, I mean, they're probably trading on Bitcoin, but a lot of them are probably trading on Robinhood as well. I mean, on Coinbase, but they're probably trading on Robinhood as well. So you can look at here, in and out. It got you in here, like I said, out, and then back in because it closed above the 30, but you would have waited here, and then it got you out. So, but I mean, the losses are small. This one, you pretty much didn't make anything. It in and out on the same candle. Here, you would have lost 0.5%. So 1% if you would have been paying a commission. Here, so these are all coming back to these trades here. Say 1.25%, 0.75%, 1%, nothing because it would have got you in and out the same candle. 0.75. This one would have basically broke even. So there's a lot of trades here that we're losing, but overall, this one would have got you 8%. That was on November. But right now, you're in a trade that's profitable because it would have got you in at 18.1, and you'd be profitable right now. So all those little ins and outs would have got you, would have had you some losing trades. But just refining this code to possibly waiting 2 candles, right, instead of the 1, could increase that to profitable with commissions. But I'll have to figure out how to do that, how to code that in. But so right now say we're at 19.4. You would have gotten an 18.1. I could have just drawn the arrow, but anyway, it's a good exercise if you don't know how to do the returns, the ROI on your own. And then I'll divide that by 18,100, and I'm up 7%, in about a day. So that's not bad. All right, and then you exit. You exit when this closes, which is all the way down at 18.7 or almost 18.8. So. Okay, so I did say I wanted to do some stock stuff. So that's Bitcoin. We'll see what happens. Arranging. I mean, you can kind of see there's a trend line that kind of developed off this 9 here. That's pretty steep. But we'll see if it holds. It might not hold. It might break a little bit, and then But right now, that's the trend. So as soon as this breaks, that could also be an indication of we might get a little bit of a pullback. Not a big breakdown, but a little bit of a pullback, maybe a couple candles. So, yeah. So I wanted to go over some equities, some stock market stuff. One that I saw some chatter about because it's moved this tremendous amount is Etsy. So, and I mean, if I'm honest, I had heard of Etsy, but I didn't know exactly what they did. And I guess it's like an e-commerce website. So let's look at 30 MA. I mean the triple MA and kind of tell you or show you when it would have told you to go all in a position. And that would have been right here, all the way back in April 13th of 2020, that week. And if you would have entered on the close, you'd currently be up 178%. So that's why it's important to build a watch list if you're trying to do this. So you build a watch list, you kind of go back to that list and look at those stocks maybe every now and then to kind of see where they're at if you're trading this type of 3MH strategy. So that would have been a tremendous trade, and you would have got that in how many months is that? Or how many weeks? Let's do weeks. So from here, you would have waited 34 weeks to get a return of about 178%, which is tremendous. All right, so April, so 8 months. That's pretty good. Best traders in the world do about 20 to 30% overall for whatever portfolio they're managing. So that is a great return. On the weekly, I mean, it still says that we have 5 more weeks. On the daily, will we get that? I'm not sure. I'll have to look at that. But that would have been the trade, right? That would have been the entry and the exit. And you exit based on once these trend lines start to go down, so the way the scaling works is it's 25% whenever the orange closes above I'm 15%. Whenever the orange closes above the blue. Whenever the orange closes above the pink, that's 25%. And then you go all in with the remaining amount, 75% of whatever you're allocating towards an asset, whenever the blue closes above the pink, and then you ride that out until these start to break down. So like here, we had a weekly close below this. You would have taken 25% or 15% of your trade, your initial trade, off of the table. You can do that in dollar terms or share terms. It'll kind of get you around the same amount. So you would have gone 15% out of your investment. You would have re-entered that back in here, 15% out, re-entered. You'd still be all in. So you would have went in and out twice, only 15% though. You go completely out once the blue closes below the pink. That would be 75% completely out. That's how these work. They won't necessarily always get you the top because they're moving averages, and they, just like I get the analogy that's always used is like small boat can turn quickly, medium-sized boat can kind of turn, and then a large cruise ship takes a long time to turn. That's kind of like what these are. But you could exit, look at your smaller time frames, and you could exit. If you have an exhaustion point here, you could have exited a little bit early, but you're taking a position with this. This is a longer term trade, so you would have warranted. You would have been fine. Like I said, 178% in 8 months. But right now, so potentially 9 more days. I think then 4 hour hit a 9. So a little bit of exhaustion. We can look at the RSI and see how that is doing. Kind of overbought area. Daily, not yet there yet. So this could be a good indication of next week. We're going to get 7, 8, 9. We'll get a 9 count all the way up, potentially breaking the 75 and really running. We might get a candle. That's a large candle. Let's see the past couple of days. This one, we might get a 10% run in a day. Looks like that's been the most this has ever really moved on a single day. Is about, a big move day is about 10%. So we could get one of those candles. As far as back testing, this one was fine. That consolidated broke out. This one was fine. This one is also fine. This one is way down here at $32. Is that going to happen? I'm not quite sure. There is something called, and you can look it up, it's called hyperwave theory. So this is almost exhibiting that type of movement. The way it works is you have a previous high that goes along for years, and then eventually that gets broken there. So that broke there, and then what's next is you have 7 phases. This one looks like it's either in the third or fourth phase of that. So you have 1, and then this one would be like 2. See, it's kind of weird because it would have been much nicer if it would have stayed drawn here and then broke out. But I'm gonna say, and you draw this on this hyperwave theory is drawn on a weekly time frame. I mean, you can do, people talk about fractals and stuff like that. You can do it on smaller time frames, but its originally intent was to do it on the weekly. So this is kind of also still flat, but let's just say we didn't get these 3 or 4 weeks of uh, of price action that dropped below this. So that would be 2. That would be phase 2. And then this, I mean, see, this angle's about the same. This would be phase 3, and then you would technically get a phase 4, which would be even steeper than this, right? It would be like this, something like that, which is kind of crazy price movement. That would mean over the next couple of weeks, I mean, it's running up aggressively. The Bollinger Band, it would be outside of the Bollinger Bands, which is not something you can't do, but that would be a good indication of, man, this is getting close to the top. So this could run, over 200 within the next month, which would still get you a return of, maybe another 20 to 40%, maybe. I mean, this has to kind of be a little bit lengthy. So yeah, we'll see. But the way hyperwaves work, and Bitcoin was speculated to be in a hyperwave whenever we were in 2017. And a lot of people feel that. So the target for Bitcoin to complete that hyperwave was 1,000. We got all the way down to 3, and if BitMEX wouldn't have gone down, a lot of people have said that Bitcoin probably would have went to 1,000 and completed that hyperwave. Whenever hyperwaves are complete, they restart. There's a whole book that was released, I think, last year or end of last year on hyperwaves. I probably got to pick that up to learn more about them. Everything I'm telling you here is just stuff that I've learned from watching videos on the Hyperwave channel. That channel is no longer active, but it was good information. They still have a Telegram group for it, but so yeah, it would be this, and then you would get a drop right here, and then you would get a secondary high, and then to complete the phase 7, you would go all the way back down to $31, which is kind of crazy, especially if you're an Etsy holder. Having someone tell you that, oh man, your stock's gonna go, say, from 200 all the way back down to you're gonna get an 86% loss. That would be disheartening. But this could absolutely not be a hyperwave. It's just something I noticed whenever I was looking at it ahead of this video, kind of planning. This could not be that, even though it has a structure that's similar to it. I mean, it really wasn't here, right, because it's flat. But like I said, if we just kind of disregarded this. But anyway, so that's the analysis here. The RSI is still not overbought on the weekly. You would really want, as this price is climbing, because I've talked about this before, there's divergence here. So you're getting higher prices but a lower RSI, which is an indication of bearishness. It's bearish divergence. So for it to have a climb and it be sustainable, you would want it to be above, at the very least, above 73 whenever it breaks this 70, if it does. On the daily, you're probably getting the same thing. Yeah, you're getting the same thing. Even on a smaller time frame, you're getting divergence. So this could be the top. Let's look at the 4-hour. It's going sideways, but you kind of have the same thing. We can look at the CMF. CMF is, that's not good. That's downward pressure. That's downward selling pressure. Again, you'd want it to be higher. It's getting divergence, same thing. Same thing here, even more pronounced than the RSI. So that could be that's so if I'm in this and I have a trade and I entered all the way back, this is telling me, hey, the top might be there. You need to be cautious. You're on a 5 hour here. You're on a 4 hour. On the 4 hour, you have a 9. Maybe take some position out whenever you close below this 157. That would be, I mean, that'd still be a substantial drop. But if you really wanted to hold in there and kind of ride a dip out, a potential dip, that's a 6% loss on your total. So that'd be 172. But that's still, man, those returns are enormous. If you bought on Friday or Thursday, then yeah, this would that drop would be significant for you. But if you're in all the way back since April, you're fine. This is called the Guppy. So this is a collection of exponential moving averages here. That kind of gives you the spacing of this, kind of gives you an area that says, hey man, I need to pay attention. There's getting large separation, which means the price is moving upwards extremely quickly. So that could also give you an area of, I need to be aware for pullbacks. Here, consolidated, came down. But you can see here, I mean, all the way back 2018, big gaps, came back, tested this area, found a bunch of support, went back up. Then eventually, they can't trended down, separation, potential bounce, separation, then it took off. So, yeah, so maybe this pullback gets, at 170, gets as low as these trend up, say 130, 140. If it doesn't, it goes much higher at 200. That would lean me more into an idea that it's that hyperwave type of pattern. So we'll see how that goes. But yeah, I mean, I'm just holding. I'm just in it. I'm just holding. Let's look at the stop reversal points real quick. We're still bullish here. These are still fine. This we broke. That could be early indication, especially whenever it broke after a 9. Oh, actually it broke up. So that's bullish. But I mean, based on the CMF and RSI, where you need to be a little cautious. These Ichimoku clouds are probably way above any sort of resistance. I like using Ichimoku clouds whenever the price has gone down and it's looking for areas to break out of. Here, it's really just an indicator showing you that you're well above these settings here. And they're basically, it's like a collection of moving averages. You can look at the math. It's not difficult to kind of get what's going on here with these clouds. But that could be an area of support. Like I said, maybe it goes down to 130. That would be an area here. I mean, it's going to move up next week, but and then yeah, I mean that's pretty much it. We can try this strategy on that 1 hour strategy on Etsy and see what it gives us. It's probably going to be profitable considering that the price has moved up so much so quickly in the past couple of months. Yeah, it's saying 230, 239. And this isn't even, yeah, it's even more. So that's a good strategy. And this is since 2018. You could have used this the whole time since 2018, and you would have been 300% up. So that's, what is that? That would have been almost 3 years. So whenever you do the compounded annual growth, that's probably around 75%. Let's see what the biggest losing trade. Max drawdown was only 10%. If you would have bought and held here from 2018 on January 8th, you would have a return of 736%. So actually, the holding, you buy and holding an original position of the same amount, dollar amount, would have warranted you 2x. So sometimes, hey, the strategy would have warranted you 300, but buy and holding was much better. So, and then we can fiddle with this. Let's change it to like an exponential moving average. That would have warranted you even better. Let's do a 50. That's not as good. Huh. So the 30 actually was better. 30 exponential. Let's look at that again. yeah, still would have warned you better to just hold. But if you didn't get in exactly in 2018, you still would have been profitable here. So that works there, and I figured it would, since it's been so profitable over the past couple of months. I mean, it was the past couple of years too. So that's Etsy. I'm cautious a little bit, maybe setting some stops on where I would like to take profits, but it could run up a little bit more. You could have a lot more, right? So what would I say? It could go up to 200. Somewhere around here, you might have another 30%, and then you might only have another 8% or something like that. But you'd wait, see how price develops. You do have some indicators that are giving you some divergence signals. Nothing. I mean, the Bollinger Bands are on the upper end of them. On the weekly, you are, but that, I mean, yeah, price ran up a lot, but you're just cautious. You're not panicking to go hit the sell button. You're setting some stops. We can look at the volume. The volume has kind of been trending down. That's another indication of some bearishness overall. The volume's been, see, it's like, I mean, with trading, once you study and start to kind of understand these patterns and these, some of these indicators, you don't want to, you want a toolbox, but you don't want, there's a joke that's like, you look at someone's chart, and the more complicated it is, you don't want to follow that person. And that's also with like, maybe if you do like some sort of design, it's like, or you're writing code, it's like, that it's maybe good code, or like, it's well written whenever you no longer, it's not about adding things, it's whenever you no longer can take things away and it's efficient and optimized, and that's when it's probably doesn't need to be fiddled with anymore, or worked on. It serves its purpose and it's being productive. So same thing here. You don't want to have a chart that's full of lines and have have 20 indicators that you're going off of, because the longer and longer you look at a chart, the more bias you can be, especially if you're if you want to be like, if, oh man, I really want to buy this because I think it's good and everyone says it is. So you're going to look for things in the chart that say you should be bullish. And then the same thing, if I'm looking at something and I'm like, man, it's run up so much, I want to short it. I'm going to look for things in the chart that's going to make me enforce my, my thought that, oh, this is bearish. I need to short this. So if you look at a chart and you don't feel automatically that, man, everything's kind of lining up, then it's probably not something you need to trade, or you need to wait a little bit longer. You want to be as quickly as you can in a chart and out, to not create as much bias. So that's another good thing about TD sequential. I can look at it and be like, oh, I'm at a 9. Maybe I should wait. I would, if I would have went on the 10th of August, I would have been like, oh, I'm at a 9. I can just, I don't need to take a position. This is telling me there's going to be some pullback, even here. But I had a daily close above that, and then you would have counted another 9. So that's here, and then the 9 was actually here. So yeah, you would have waited. Here you had a 9. You would have waited until it closed above it, and maybe take position. So so that's Etsy. That's kind of really all I wanted to cover. Gold is not looking great. I looked at it earlier in the week. These moving averages are still trending down, even though there's a lot of talk about going bullish silver and gold. I'm not going bullish silver and gold right now. I said it needed to get above 1900 for me to, these highs are right around there. So just say, give me 25 points above 1875. I find support, and then I keep on going up. Right now, we had a good week, 3%, and then it went up and lost ground. And now tomorrow or later this afternoon, it's going to open up, and then we'll see how it goes. This blue is below this pink. Yeah, this is trending up because we had data from here. But if this blue closes below this pink, and then we get a daily close below 18 1822.50, we're most likely going to go to 7, 8, and then 9. And we're going to back test this, say 1750, mid 1700 area. I'm waiting. I'm being patient. I'm not trying to catch a knife. Silver probably looks a little bit better. It moves a little bit. There's a little bit more volatility in silver. Yeah, so it hasn't. Its trend lines are kind of not as pronounced as far as down. These are moving sideways. So maybe, and I also said that silver would be a better play than gold. So if I'm going to enter position, I'm actually going to enter silver, because if we look at the gold and silver ratio, that's still back where I said. So yeah, we're just holding this line. So if I'm sometimes it's also worth not even knowing what chart you're looking at. You just kind of turn everything off, don't pay attention. And if you're looking at, I don't care what this asset is, but if I'm looking at this, am I buying this? Probably not. Am I going to short it? Potentially. There's support area right here, and if that support area goes out, then it's most likely going lower, right? So 75. Once this 75 area breaks, maybe there's a line here too, right? Right here. Bam. Maybe once that breaks, I'm shorting this. This so happens to be the gold to silver ratio. So am I going to go in silver or am I going to go in gold? I'm going to go in silver. Once this breaks. Once you could technically wait for the 9, but this is consolidation, a channel and it's consolidating towards the bottom of the channel, which is not good, which means it hasn't had enough momentum to kind of bring it up. So yeah, once this breaks down, you'd want to buy silver, because silver's going to outperform gold, or silver's going to outperform gold on the downside too, right? If we get a breakdown of gold. But then that would raise up, that would go up, that wouldn't go down. It would only go down if you get price break up of gold. If it breaks down, silver, like I said, is more volatile, so you'll probably get more losses in silver than you are gold, so it's going to cause that to go up. So yeah, we're waiting, not buying gold. But that was it. This video went long, and it seems like my videos are going longer. They're not short, which is fine for me. I mean, I guess. I didn't realize how easy it was for me to talk about this stuff whenever I started. I thought it was going to be very difficult, but it's been okay. Thanks for watching.